Good morning, and thank you for joining us. Today, our topic is SBA loans and the CARES Act, and how your restaurant operation can maximize the opportunity. Presenting today is Mike Stevens and Jeff Piven, both of Shamrock Foods. Mike is Vice President of Business Consulting at Shamrock. He has over 30 years of owner, operator, and franchise executive experience. Joining him is Jeff Piven, Business Consultant at Shamrock Foods. He has 20 years of restaurant management experience and currently consults Shamrock customers in all areas of restaurant operations. First, Mike will walk you through our agenda for the morning.
Hello, everyone. As you know, there's a lot of information out there, and we're going to try to clear some of that up for you today. But please remember, Shamrock Foods does not provide tax, legal, or accounting advice. This material is provided for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transactions. Good news is there's more money available and being added to the programs we're going to talk about, and the environment is changing every day. So today we're going to cover the Payroll Protection Program, or PPP, the Emergency Disaster Injury Loans, or EIDLs, and the Associated Emergency Economic Injury Grant, or EEG. And then we're going to also answer some other operator questions. So let's get started with the Paycheck Protection Program. So what does this program do? The program offers loans up to $10 million to cover 8 weeks of payroll, plus some additional expenses like rent and utilities. The loan can effectively be turned into a grant. Most, and in some cases all, of the loan will be forgiven if a company uses the money to retain workers or hire back positions it had to cut. The SBA has waived many of its usual requirements for these loans and will not require collateral for them. So how does this forgiveness work? Both full and partial forgiveness is available. Forgiveness will be reduced for companies that have trimmed their overhead and or cut workers' wages by more than 25%. If a business uses money from the economic injury disaster loan, or an EIDL, which we'll discuss in a little bit, to cover payroll, it can try to refinance it through the Paycheck Protection Program to be eligible for forgiveness. The Small Business Administration may forgive the loans which are offered through the SBA-approved banks, given certain stipulations. Any unforgiven portions would carry a 1% interest rate and come due within 2 years. For example, to qualify, businesses must keep their workers and wages intact. Only funds used for payroll costs, rent, utilities, and mortgage interest over the 8-week period can be forgiven. The forgivable nature of debt is one of the program's key attractions, but business owners may owe more than they think if they don't pay close attention to the fine print. Those hoping to have their entire loan forgiven by having it turned into a grant must use at least 75% of the funds for payroll. That's because only up to a quarter of the loan's forgiven amount can be used for non-payroll costs like rent. The loan's total forgivable amount can only be 25% of the total payroll. So for example, if a business's total payroll is $75,000, the maximum forgivable amount would be $100,000. So the next question is, how much can I borrow? Companies can borrow up to 2 months of their average monthly payroll costs for the past year, plus an additional 25%, up to $10 million. So what is the payroll calculation? The payroll calculation includes the following: employee compensation, tips and wages, group health insurance premium payments, state and local taxes, self-employment income, and any retirement benefit payments. Now I'm going to throw it over to Jeff.
Thanks, Mike. Next question is, what if I already laid off my workers? It appears that you can still have your loan forgiven if you hire them back before the loan money hits your account. The program generally uses February 15th of 2020 for calculating your, quote, pre-pandemic payroll. Seasonal businesses can use a different date. As long as workers laid off after that date are brought back before the disbursement date, the layoffs don't affect eligibility for full forgiveness. But some businesses will need to bring back workers. Several lenders said the rules appear to allow applicants to choose a date between now and June 30th, 2020 for their loan to be dispersed. So most are still trying to work through the technical details involved in that. Next question is, I'm self-employed. How do I calculate my payroll cost? The CARES Act text says that you can claim your, quote, wage, commission, income, net earnings from self-employment or similar compensation up to $100,000 per year. You may need to work with your accountant or lender to confirm what qualifies. This stipulation is intended for the operator to be able to receive benefit as well as the employees. Our next question is, I have a lot of part-time workers and independent contractors. Can I include them in my payroll calculation? You can include the loan to cover payments for part-time employees based on their pre-pandemic average hours and earnings. But independent contractors and gig workers aren't covered in your payroll calculation as they're not on your payroll. They are eligible to apply for their own Paycheck Protection Program loans. Big question here, how do I apply? You must apply through a bank or other lender. So these are going to be SBA approved banks. So start by contacting a bank that you already have a relationship with. Many banks are imposing restrictions and choosing to work only with their existing business customers. The Treasury Department has said it wants financial technology companies and lenders that have not traditionally participated in SBA programs to make Paycheck Protection Program loans. More of those lenders might join the program in the coming weeks, but there's significant red tape involved. Many of those who said they want to participate are struggling to be approved. The SBA has a search tool and a list of top lenders to help you find nearby lenders, but again, they may not be open to taking new customers right now. Mike, I'm going to hand it back to you.
Great. Question, why does my bank say it's not ready to take my application yet? There's been a lot of problems getting the program off the ground as quickly as promised. The Treasury Department said the program would start taking applications on April 3rd, a week after the bill was signed into law. But the department didn't give lenders the necessary technical information until just hours before the program was scheduled to start. And the lenders are still waiting on some key guidance and documents. Many are still developing their application and systems rules. So do I have to show hardship in order to apply? There is no specific requirements. You do not need to prove a sharp drop in sales or a forced business closure, for example. Applicants simply have to certify that the current economic uncertainty makes this loan request necessary. And it's necessary to support their ongoing operations. When applying, make sure you indicate that the reason for the loan is COVID-19. Another question, what if my loan is only partly forgiven? Well, you will have up to 2 years to pay off the balance, and it's at a 1% interest rate. No payments are due for the first 6 months after you receive the loan. And when is the application deadline? The application deadline is June 30th, but you must apply as soon as possible. June 30th is the date Congress set for the disbursement of the $349 billion it is allocated for the program, but the money is likely to run out faster. That means some applicants may be turned away unless Congress authorizes more funding. On Tuesday, the Treasury Department said it would request another $200 billion, and yesterday it announced that $260 billion in aid was acquired. Jeff?
Well, that's good news, Mike. Thanks. So the next topic we're going to talk about is the other loan product that everybody has questions about, and that's called the Economic Injury Disaster Loan, or EIDL, as it's popularly referred to. So what does this program do? This is a long-standing program offering low-interest loans up to $2 million for businesses that have suffered losses from some kind of disaster. COVID-19 is the qualifying disaster that has activated this loan. These loans are made directly by the SBA, and you can apply right on its website. You don't have to go through the bank. Federal legislation in response to the pandemic committed more money and relaxed some of the SBA's usual requirements for disaster loans. It has also added a provision essentially offering applicants small grants just for applying. Those are called the EIDL, and we're going to talk about that in just a moment. The next question is, does this program provide loan forgiveness. This is one of the big differences between the PPP and the EIDL loan. The forgiveness on the EIDL is only partly, and that's due to the EEIG or grant that I just discussed in the last question. Businesses can request up to $10,000 of an EIDL disaster loan as a grant, also known as the Economic Emergency Injury Grant or EEIG. It's described on the application as a quote loan advance, and that's a button that you're actually going to have to actively check when you're applying for this loan. But the SBA officials have confirmed that it did not have to be repaid. Borrowers will be on the hook for the rest. The CARES Act made that $10,000 grant available to any qualified applicants, whether they are approved for the loan or not. A worthy note on this is a message posted on the website of Senator Brian Schatz, Democrat of Hawaii and a member of the Senate Banking Committee. He said that the SBA may limit the advance and was providing $1,000 per employee up to 10 employees. Mike, I'm going to turn it back to you.
Thank you. What do I need to know about repayment? Well, the rest of the loan can be repaid on a term of up to 30 years. The interest rate is set at 3.75% for small businesses, and there'll be no payment due for the first 12 months. So a lot of people ask, is there a catch? Yes, but it's not near as big as before. Usually disaster loans require the personal guarantee of repayment, meaning the SBA can seize your personal assets, like your house, if you own one, if you become in default. But in response to the pandemic, the SBA is changing that. It will not require a personal guarantee on loans of less than $200,000. Business assets like machinery and equipment can be used to secure loans up to $500,000. Larger loans will require real estate, whether it's your business or your home, if you have it. And if you don't, the SBA said it will not turn away borrowers because of a lack of collateral. What documents do I need to apply for the loan? The online application is designed to be simple and can be completed in about 15 minutes. We've talked to customers and they validated that for us. You'll need to know your business's gross revenues and cost of goods sold for the 12 months that ended on January 31st, 2020. When the agency processes your loan, it may request additional material, including federal tax returns and a year-to-date profit and loss statement. The big question then becomes, when will I get my money? The SBA is supposed to disperse the EEIG and or the $10,000 grant portion that does not have to be repaid within 3 days of receiving the application from the owner who self-certifies that he or she is eligible for aid. However, potential borrowers state the time frame has been a bit longer. In normal times, it typically takes around 2 weeks for the SBA to make a decision on a loan application, and up to a week after that for the check to be dispersed. Jeff?
Thanks, Mike. Next question that we get, how much money can I borrow? Actually, for these loans, you don't request an amount. The SBA will determine how much you can borrow using a formula intended to approximate 6 months of your operating expenses. Now, to calculate that, the agency will generally subtract the cost of goods sold from your revenue and loan you up to half that sum. Big question is, what can I use the money for? The loans cannot be used to refinance previous loans. Anything else is fair game. If you use the money from a disaster loan to pay your employees, you could try to refinance through the Paycheck Protection Program, which allows for the loan to be forgiven. What's the application deadline for this program, especially the EEIG, which is the $10,000 grant? You're going to have until December 30th of 2020. So next question, and in my opinion, this is the biggest one because we've covered the PPP and we've covered the EIDL loans. So which loan is best for me? Now, there's no clear guidance around this, and this is not financial advice. However, I believe that there are really two states of a restaurant business right now. For one, first example, if your business has closed and you've let go some or all of your employees, you might pursue the EIDL loan to shore up some expenses that you've incurred, perform some changes in the business model, and fund reopening expenses. Another example, if you have remained open and somewhat viable through delivery, takeout, drive-through, etc., and you believe that added capital to fund payroll and some overhead might push you through to get to the other side of this pandemic, the PPP is probably the product that you want to look into. Whichever path you choose, remember that the EEIG or $10,000 grant will be awarded to anyone applying for an EIDL loan. Mike, take us into the frequently asked questions.
We've had some questions that fall outside of these loans be asked of us, so we thought we'd address those also. So the first one is, I'm a sole proprietor. Am I eligible for unemployment if I'm no longer working? The answer is yes. Self-employed people are newly eligible for benefits. Benefits will be based on previous income using a formula from the Disaster Unemployment Assistance Program. Self-employed workers will also be eligible for additional $600 a week benefit provided by the federal government as part of the CARES Act. This program is new, and you'll have to ask specifically for it. Another question we got: I'm having trouble paying my bills. What else can I do? If you already have a loan backed by the SBA, there's good news. The agency is paying in full for 6 months the monthly payments, principal and interest on existing loans and any new loans made before September 27, 2020. The relief applies to borrowers with 7A, 504, and microloans. Congress estimates this will help about 320,000 borrowers. Borrowers with existing disaster loans are eligible for a payment deferral through the end of the year, but interest will continue to accrue. Many banks, landlords, and other creditors have said that they will work with borrowers affected by the pandemic, but this is generally up to them on what aid, if any, they are willing to offer, so be proactive and ask for that assistance. Another question: I'm keeping some or all of my workers and I don't want a loan. Is there anything else available for me? The Employee Retention Credit is a refundable tax credit for employers of all sizes who hang on to their workers through the pandemic. It offers a 50% credit on up to $10,000 in wages per employee, meaning the credit will be worth $5,000 per worker. It's available on wages paid between March 12, 2020 and January 1st, 2021. And companies can file with the IRS for an advance payment on the credit. Companies are eligible if the government ordered them to close fully or partially, or if they have a drop in sales of at least 50%. Eligible businesses with fewer than 100 workers can claim the credit even if their employees kept working through the crisis. However, the credit is not available to companies that take out a Paycheck Protection Program loan, but you can still claim the credit if you take out an economic injury disaster loan. Emily?
Thank you, Mike and Jeff. Such valuable information and an important first step in looking to the future after the COVID crisis is behind us. For more information about SBA loans and other resources to support your business now and how to plan for the coming months, please visit our website at shamrockfoodservice.com. There you will find a COVID resources page with checklists, articles, success strategies, and more. And be sure to follow us on social media at Shamrock Foods for immediate access to these tools. Looking ahead in the coming weeks, we will be rolling out more informational webinars. Upcoming topics include preparing for post-COVID and uncovering the projected shift in consumer expectations for restaurants when all of this is behind us. If there are any questions about the information shared today, or if you have any comments about the information shared or topics you would like for us to explore, please follow up with your Shamrock Food sales representative or email us at kitchentents@shamrockfoods.com. Thank you for joining us, and thank you for your partnership. Take care, everyone.